Do brokers hunt stop losses? Myth or fact?
The largest question I've ever heard is, hey, is stock operation real?
Yeah.
Are there operators out there who are moving stock? Can we make money out of it? Are they making a lot of money? Is pump and dump real?
It is widely believed that in times of stock market crashes, the investment department at LIC gets a phone call.
So today I can full and finally settle.
Does technical analysis even work? Isn't it just a scam? Even there was a promoter group who I know personally who were engaging in very casual conversations with their friends and family and saying that, hey, we're going to come out with a bumper result. And we are back with the Aftermarket Podcast. I know we missed a single week.
But I know you gave a banger video to fill that.
Yeah, that video a lot of people liked and appreciated. So thank you for that. So
Ajay playing very humble. Yeah, let's get into this.
I was very happy. Yeah. So I think over the last podcast, it was more of a serious tone, right? So we talked about a lot of indices. We talked about India's defense sector and mostly the discussions revolved around that. Today, I want to make it more sinister, more complicated, where we'll be discussing a lot of conspiracy theories that people would like to know the truth about, right? So here we are, a table of experts who have talked to a lot of people in the market, interacted with a lot of human beings across events and in real life. And I think we have some interesting takes and interesting thoughts on these conspiracies.
Yeah, we have seen enough, we have heard enough, we have met enough people and heard enough information that now we know some dark secrets about the industry. But yeah, very much looking forward.
So yes, welcome to the 26th episode of the Aftermarket Podcast. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
So let's start with the first conspiracy theory and try to find the truth behind it.
Yeah, so the one very, controversial conspiracy that, I keep getting, we are index traders. I don't usually get into stocks. I don't usually do swing trading much. I'm a index option trader. But we keep getting these stories that a stock has moved from, let's say, a penny stock moving from 10 rupees to 100 rupees, maybe sometimes 1,000, and then falls from there, people losing money, making money. So underlying factor when we try to analyze who is doing all of this, a name that pops up is a stock operator. And then everybody starts, having their own narratives. Like, do they even exist? Is that some kind of mafia? Is there some underworld or some dark side of the market that exists? Even I felt nothing of that exists. Maybe something is happening. But I got curious when you said your story. And I think that story should come out.
Yeah, I think we can settle this full and finally today in this podcast. Because even since my inception in the stock market also, from the time I've been part of it, I'm talking to people, I've been doing videos and seeing comment section. The largest question I've ever heard is, hey, is stock operation real? Are there operators out there who are moving stock? Can we make money out of it? Are they making a lot of money? Is pump and dump real? And that has been a question which bugged me also a lot. But then recently, over the last many months, part of a lot of events that I'm going to, I finally got to meet some operators in real flesh and bones, and I could meet them. I spoke to them. They took me to the side of the event. We sat down. They bought me coffee. They actually pitched me the idea of stock operation. Hey, you invest so much money, we'll tell which stocks to invest in. We are operating these stocks, and you just put your money and you'll make so much returns. And all you have to do is give me X% of the profit.
Yeah,
that was their pitch to me. Yeah, so finally I met them. So today I can full and finally settle the very hot topic of are operators real? They are very much real. They're out there. And what is very interesting is they're working with promoters of certain small companies. So it's all a setting. So they all have all these stuff set up. So promoters are there, these operators are there, and then they get people to invest into these stocks. That's why they pitch to me. And it's I don't know, it's a well-oiled machine with which they are doing it.
So it's interesting because it happens both ways. So sometimes operators approach the promoters. They say, hey, we found your stock interesting. They again take them to the side, buy them coffee. Mostly I've heard that. So if you're interested in a company stock and you want to approach them, you just go to their AGM, their annual general meeting. It will be a small event because it's a small company and you can personally meet the founder, the promoter and have a chat there, right? And it also happens the other way where the promoters actually come and approach these people because they have some clout, they're well known, and they ask, hey, So we have we need to make some exits for the promoter holdings. Can you help us do that? And all of this then comes to shape.
But then I have a fundamental question here. So why would even a promoter like to do that? Because it's a very bad PR to the company. You take a stock moving up and down. It's like
But
all
then
over
how
the news.
many news is actually coming out?
Yeah,
I mean,
exactly.
it
That
is
is
only
also
bad PR if they get caught. I
Yeah.
mean, hey, we are living in a world of capitalism where people want to make money by doing
Anything.
any kind of shady stuff.
Yeah.
Yeah.
So when these operators are doing such good stuff, I think when I met so many people, now I kind of understand to the depth of which it is actually happening. A
Yeah.
lot of companies it is actually happening. Small companies.
Yeah.
We're speaking about multiple thousands of companies in NSE alone, and BSE is even more companies.
Yeah.
So then operators do it in a very discreet manner that the chances of it coming out is very less. They even, one of those operators even said that they even bribe officials from certain departments
Yeah.
to get this done. So when it is being done discreetly, promoters are looking at, hey, the chance of getting caught is less, but the chance of making money is much higher.
yeah.
Then, hey, they just join the bandwagon. So it is real.
I'm really curious, like, how do they approach? Like, who is funding this? Because for any stock or any company to actually move up or down, a certain amount of money has to be pumped into that stock. So, who is financing all of it? Is the stock operator putting his own money and then taking a share? Is
No.
the promoter putting in
Yeah.
money? How is
Got
it happening?
Got it. So I do think they put in their money as well, but more importantly, they go around meeting people with money and asking them to, offering it as a deal. Hey, we'll tell you which stocks to put money in. You invest that money. So money is coming from those investors. And when you make profit, give us a cut of that profit. This is what I said in the beginning. So that is how they came to me also.
Okay.
They presented it as an investment opportunity for me. It is an investment opportunity. We'll tell exactly, you put money in your account.
Yeah.
We'll tell which stocks to invest at what time and when to sell it also.
Yeah.
We'll tell
Okay.
exactly what to do. And when you do that, you will make profit. Give us so much share of that profit. And they also even said that it is guaranteed profits.
Yeah.
In a year, if you do not make profit, we will give you, I mean, whatever loss you're making, we'll
Yeah.
settle that with cash. We'll send you
Oh,
cash is also
because
something
it's all
that they
black.
say. So they're so confident that they'll get it done because that's the level of setting that they have.
Because they're
across the
actually
board.
directly partnering with the promoter because they know they can do that.
Yeah, and then they again pump it up by giving articles, maybe SMS tips, Telegram tips, and all of that. And retailers join the bandwagon, and then people like this can exit.
So they're technically asking these HNIs to trade in a particular instrument or a stock, and after they make money, they're going to recover it.
Correct.
That is how this works. This is looking something like, in Squid Game, the character goes in a railway station, some guy goes, plays games, gives a card to make a lot of money. This is all similar approach style, dark world that is what I can understand.
Yeah, the thing is, like, if someone invests also, right? If things go bad, I mean, they would say they will settle in cash and stuff
Yeah.
like that. If things go bad, I mean, if they get caught, even in the remotest chance, they could get caught. Things could not go as they planned. So things could go either ways. But yeah.
So even when we're talking about promoters engaging with these operators, promoters also engage with their friends, right? They give them early tips saying, even there was a promoter group who I know personally who were engaging in very casual conversations with their friends and family and saying that, hey, we're going to come out with a bumper result. You better buy the stock.
Correct.
Right? And these are what we call as insider trading. It's not pump and dump, but it's insider trading. And I think to a certain extent, SEBI cannot catch any of this, right? So we'll have to call it a fact. It does exist.
Yeah.
And unless it's done on a wide scale, even SEBI knows that unless it's done on a wide scale and there's some pattern that they can follow, that they can catch, it's very difficult to catch a hold of this.
Also, I feel SEBI or anybody would have a issue if it is artificially pumped or, retailer is losing money because of this insider trading. Only then it becomes a big thing and maybe things will flag out. But let's say a group of people in the same company are working, they'll have insider information. I know they are
still illegal.
I know they are restricted from trading in their own account, but we know how things work out. It's still illegal, but we can't stop it.
Capitalism.
Yeah.
Okay, conspiracy settled. So myth or fact? It's a fact.
Yeah.
So let's get to the next one, which is, do brokers hunt stop losses?
So one very straight answer is brokers do not hunt your stop loss because it is not the game they are in. They are not, traders. They are just a mediator. They are providing you a platform where you can trade. So,
But do they sell my data, my stop loss data to everyone and then help others make money? That's also a question.
so there I would say is they're again intentionally not selling your data. They don't want you to lose money, because if you are losing constantly money by coming onto their platform, it is taking a hit on their business that no business would want to. So there's a concept called market depth. So even if you go to your Zerodha chart, or even Upstocks provides it, I'm not sure, but Zerodha does it. So when you have a option strike, then you click on market depth, you see 4 or 5, then you click on more, you get 20 market depth. So it's like every strike in your strike price, wherever is the bid and ask, you'll see multiple prices, and you'll see how much of limit orders are there. You'll
Open
see
orders.
You'll see open orders, how many are pending. So to a regular trader or an investor, you can see only up to 20 levels, so 20 price points. But maybe for an institutions, for HNIs, for those people, because of the volumes that they trade in, for the risk that they take in, these brokers tend to provide them much in-depth market depth. So it's like could be 50 levels or even sometimes 100 levels. So they can see, okay, if the price is at 100 rupees, they'll have 101, 102, 103, like that, maybe 50, 60 levels, and they know where the highest amount of limit orders are pending. So now they clearly know that majority of people are sitting there with their stop losses, which is kept in the system. So obviously they'll make sure whatever in their capacity to move there and hit that and make money.
Who will make sure? Not the broker. So that's where we need to bring clarity, right? Not the broker. So that's where I think I can settle this conspiracy also. Given the last many months, I've been meeting HFT traders, I've met market makers. So I have some glimpse into how they operate and how they work and stuff like that. So it is very clear that they have HFTs, for example, they get in and out in like seconds. And that's how they do. And market makers, their job itself is to look at...
catch the bid and ask.
Look into the order book, understand what's happening in the order book, what is the dynamics there, and then maybe make some interesting moves based on what is in the order book.
50 paise, 1 rupee, that's all they even try to make.
Correct. And what is in the order book? All these limit orders, like how Nihal was saying. So when you put in limit orders, and that's what your stop loss is. The stop loss is nothing but you're saying below a level, you're already putting in a limit order saying that if it goes there, I want to exit. So now the information that you have a open order there is available to these market makers, HFTs, other traders. Now, these other traders and HFTs, they see that limit order and they want to make use of that limit order for their benefit.
I am sure even if someone who is watching, they had access to this, they will also do it.
So again, I want to settle this by saying that if you put limit orders, there are people watching it and they would want to make benefit out of it. But nobody is hunting your stop loss. That is a trader who is losing money, taking things personally. Right? Because they are losing money, they are losing their mind and they are taking it personally. Hey, someone hunned my stop loss and market is reversing, things are against you.
I know you're making fun in a way of our audience, but we have also felt the same.
No, absolutely. I mean, I understand that. I've also gone through it. I completely understand that. But then, hey, today I understand what the reality is, right?
So this is just like, we look back at our mistakes and we feel like that is not my mistake, but it is actually part of the game. You mature and then you realize stuff. So one advice I would give for any trader is, if you're a beginner, still have a limit order. I know Sharik said limit orders is shown, but when you're just starting out, your psychology or your experience of taking a loss is still not established, or you're not psychologically there. So initially, take that limit order, keep that stop loss, let that hit. That is all fine. Once you reach 1-2 years of experience or 3 years of experience in trading, where even though you don't put a system stop loss, you're going to exit there without your psychology taking a hit, then I think you can move away from that and, not be a place where your stop losses are getting hit.
Okay, so settling the conspiracy, is it a myth or a fact? I would say in some way it's a fact, because there are people searching for limit orders.
Some way in a fact, but it's not broker hitting your stop loss.
It's not brokers. It's just part of the market where people are searching for limit orders.
Correct.
Right? And limit orders are a good place of liquidity and places to easily execute. And yes, those are being caught or being hunted.
And these limit orders could be stop losses or profit target orders.
Could be.
And when your profit is hit, you don't make noise. When you hit a stop loss, you make a noise, so it becomes a thing. That's it. So that is where, after we settled these two conspiracies, I want to move into a larger conspiracy, which might involve government also. So the conspiracy is, whenever market falls, Nirmala Sitharaman, our finance minister, comes and says our retailers are supporting the market. But when we actually look into the data, it is actually LIC supporting the market. So there is this larger conspiracy theory saying that if markets are falling, Nirmala Sitharaman may be calling LIC people, or maybe Modi is calling LIC people and asking for a favor to stabilize the market, reduce the volatility, and pump in some liquidity into the market so our markets are stable. Because we see that if markets are crashing, something huge is happening. So even if something huge is happening, if our markets are not falling so much, we are all at a peace. So I think that conspiracy is still around. What do you feel about it?
So I'll quote Economic Times here.
Yeah.
So they said that it is widely believed that in times of stock market crashes, the investment department at LIC gets a phone call from the government to try and stabilize it. So it's a well-known fact that LIC is in the business of buying low and selling high.
Yeah.
In a way, if you think about it, it's obvious.
Yeah.
Their entire investment philosophy throughout the last multiple decades has been buy low, sell high. So in times of market crashes, in times of market volatility, that's the best time for LIC to buy.
Yeah,
And
even
they've
some
not hit
LIC
it.
spokesperson, I think their CEO, someone said, we are just doing a value investing. Markets have fallen, stocks are at great value, we are just investing.
Yeah, and they've never denied it.
Yeah.
And they also do the other part also, which is they sell at a high.
Yeah.
So they're not lying.
Yeah.
You know that they are buying low and they're selling high.
Correct.
If they're getting a call, they might be taking a decision based on it.
Yeah.
But again, their investment philosophy remains the same. And I think it's a conspiracy that we can easily settle. Yes, LIC supports the market by buying low, selling high. If you think that's a problem, maybe it's not, right? So a myth or a fact, I would call it a fact.
Okay.
So now that we have settled 3, let's get to the 4th one. So a lot of people have asked me in my comment section and in Sharik's comment section and widely discussed across the internet. Does technical analysis even work? Isn't it just a scam?
They do work and it's not a scam.
Yeah, so with technical analysis, let's be more clear. We are speaking about technical indicators here,
Yeah.
right? So I think what happens is people, even in our early days, we used to trade with technical indicators, right? And we expect it to be so right that it turns bullish. It is saying it is bullish now, and we expect market to go exactly in some way. We expect profits, and when we do not get profits, we tell, hey, technical indicators do not work. But let's try to boil down to the basics and understand what it is, right? Technical indicators, and their job is to indicate a trend.
Yeah.
And the amount of correctness of that indication can be quantified.
Yeah.
So
Yeah.
different indicators work in different ways, and their predicting power could be different as well. Now let's again boil down to the basics and understand what these technical indicators are actually doing.
Yeah.
So technical indicators are nothing but alphas. That is what HFTs and actual researchers call it. So they do a lot of data analysis, pattern analysis, and based on all the data crunching, this indicator would tell, hey, market has turned bullish.
Yeah.
It wouldn't mean that it has to be exactly bullish for the next 5 minutes as
Correct.
per your liking.
Yeah.
Yeah.
Each of these indicators work in different manners, and there are configurations for each indicator which you can change as well. So there is a lot of data crunching and analysis and research which goes into designing an indicator, and then the indicator would predict something and it would work to some likeness.
Yeah.
And I have absolute understanding that technical indicators do work. It's just that your expectation out of it could be different.
Yeah.
And that is where it comes out as, hey, it might not
And
be.
Yeah, and just a simple technical indicator working across the board for every single stock, every single index might not be a thing, right?
Yeah.
You need to, again, the tool is powerful. You need to know how to use it, right?
Yeah.
So that's why always we believe that, hey, when you're learning something, you should learn it in depth to its truest form, so that you can understand what those settings are.
Yeah, I'll again break down what is happening here, right? So a researcher, if you give a researcher a task to indicate trend, what they'll do is they'll do a lot of data analysis. They'll try to understand. So we very famously talk about Jim Simons, right? The founder of Renaissance,
Yes.
right? So Jim Simons, the best trader the world has ever seen. So Jim Simons also, if you see, put together a team of mathematicians,
Yeah.
PhDs. What did they do? All they do is data crunching. And what data are they crunching? The behavior and patterns of other traders and other investors and all of those.
Yeah.
So they're crunching that data, and this data is predicting something would happen.
Yeah.
So depending on the quality of the research, the outcome could be good or bad.
Correct.
So the question is all about which technical indicator is better, not if technical indicators are good or not. All
Yeah.
technical indicators, someone made it with a lot of effort, with a lot of logic going into it to try to predict or try to indicate the trend to some extent.
Yeah.
Some is good, some is worse, but nothing is like really bad. I mean, they came out, all what we are seeing in public are made by people, written in literature and in research papers, and are publicly popular technical indicators.
Correct.
Think about the journey the researcher would have gone through, and this indicator had to go through across time and people to come out into our trading terminal as popular technical indicators. I
Yeah.
mean,
Yeah.
there is
Yeah.
some merit to it, right?
Yeah.
So, yeah. I strongly believe technical indicators do work. The question is only about how effective which one is.
Yeah, and
so-
also the we have to understand that these are indicators. These are just giving indications. These are not confirmations. So always you should have one or two different confirmations that you should combine with to understand if this is going to work for you or not. Like how you said, if it is going for that particular specific stock or index, because each stock and each index also has a operator.
Yeah.
So and each
people could have different patterns
Correct.
and different
Yeah.
way to go about different stocks.
Yeah.
Correct.
So we have to understand all the popular indicators. I'll give you a very classic example. Even the 50 moving average, the golden moving average, which we call it, is good for investing. But I've seen in my life, very personally, people putting a 50 moving average on a 5-minute chart. Come on, guys. That indicator was itself made for investing. Now you are forcibly using it on a intraday chart, and now you are expecting results. So you have to understand why, like how Sharik said, some researcher would have spent decades of hard work and to build that indicator, and now you are using it for your comfort and you are not getting results, then you are blaming the indicator. That is not how it works. But to again boil down the question, if technical indicators work, they could be lagging, they could be giving you much prediction much before or whatever, but still they do work.
So yes, that's also settled. The question was, aren't technical indicators a scam? And a myth or a fact, I would call it a myth. Technical indicators are not a scam, they do work.
Yeah.
And then there were also few questions that didn't make the cut, like, will algos rule the Indian market in the upcoming decade? And how much money do you need to pump a stock?
Yeah.
Like all these things, a lot of people wanted to know.
But those are again very easy to find out. If you even Google it, you'll get the answer. So we didn't take it.
These personal experiences are what we wanted to bring out, and I think it's been a valuable session. So yes, so let's wrap up the 26th episode of the Aftermarket Podcast. And for all of the hardcore viewers who watched till the very end, we have a small announcement to make. So we are moving out of the weekly release schedule for the Aftermarket Podcast. So on this channel, you'll be continuing to see the amazing, well-researched stock market content that you have been enjoying even before the Aftermarket Podcast came out. So this will be moved. We are still exploring what timeline or what frequency you'll be seeing the episode. We're thinking maybe once a month, maybe once in 8 videos. Not sure, not giving a commitment here. So yes, thank you all for watching. I think it's been a great 26 episodes. That is half a year. 52 weeks in a year. 26 weeks is nearly half a year.
Yeah.
So thank you for all of you who tuned in. I think let's wrap up the video. So yes, this is Ajay Dit signing off. See you all again. Bye-bye.
Bye.
Bye.